Picture this. You're at your computer, your coffee is hot, and you're about to make your first day trade moments later. Boom! You're riding the waves of the stock market like a seasoned pro, watching those numbers climb. Welcome to the fast-paced, high-reward world of day trading. Sounds exciting, right? Well, buckle up because we're about to dive deep into how you, with zero experience, can start day trading in 2024 with some foolproof strategies to get those profits rolling. Number 1. Understanding the basics of day trading. Let's start with a quick definition. Day trading is all about buying and selling stocks or other financial instruments within the same trading day. That means no holding overnight positions. Every move happens within a single session. It's fast, exciting, and potentially profitable if done correctly. But don't think it's as simple as pressing buy and sell. In fact, most successful day traders spend months, even years, learning the ropes before they make significant profits. The market is a complex beast, and it requires sharp attention to trends, patterns, and world events to execute trades with precision. You'll need to become familiar with terms like bid, ask, spread, and volume to make informed decisions. Think of day trading like a fast-paced chess match. You're constantly adjusting your strategy based on new information, all while staying several moves ahead of the market. And believe me, it's this understanding of the game that separates the winners from the losers in the trading world. Number 2. Start small and stay small. One of the best pieces of advice for beginners is to keep your trades modest. If you're aiming to make millions overnight, that's the perfect recipe for losing your shirt. It's all about baby steps. As a beginner, set realistic goals. Try to hit small, consistent wins and let those build into something more substantial over time. Starting with a small position also helps you get comfortable without the overwhelming stress of risking large amounts of capital. Think of it like getting into a pool slowly rather than cannonballing into the deep end. It allows you to build confidence and refine your strategy without the emotional strain of large losses. Plus, keeping your capital safe for later opportunities means you'll have more chances to capitalize on a great trade down the road. Remember, it's not about winning big. It's about winning often and minimizing risk. Number 3. Choose your trading platform wisely. Picking the right platform is like picking the right weapon in battle. It's your lifeline. Some of the top platforms for day traders in 2024 include Webull, Robinhood, great for beginners, and Thinkorswim for more advanced traders. Choose one with low fees, great analytics tools, and real-time data to help you spot trends early. For beginners, make sure the platform offers a demo account. These allow you to practice with fake money before risking your hard-earned cash. Getting a feel for the interface and tools on a demo account can be invaluable before you start trading with real money. You also want a platform that has a mobile app so you can monitor your trades on the go. Because let's face it, market-moving news doesn't wait until you're comfortably seated at your desk. With so many options out there, take the time to find the one that suits your trading style. Number 4. Scalping. The sniper approach to day trading. One popular strategy for beginners is scalping, which involves making small, quick trades throughout the day to capitalize on minor price movements. Think of yourself as a market ninja, getting in and out with a tiny profit over and over again. While it requires focus, scalping minimizes risk by avoiding holding trades for long periods. Scalping might sound simple, but it's a strategy that requires sharp focus and discipline. You need to react quickly and decisively to price movements, often within seconds. The key to scalping is volume. You might only make small profits on each trade, but when done multiple times a day, those profits add up. It's a bit like speed dating. You're constantly moving, evaluating, and making decisions. Scalping is a great way to build experience and sharpen your decision-making skills without taking on the large risks associated with long-term trades. Number 5. The power of pattern recognition. Chart patterns like head and shoulders, double tops, and trend lines aren't just terms traders throw around to sound fancy. They are crucial to predicting stock movements. Pattern trading allows you to spot when a stock is about to reverse or continue its trend, giving you a heads up on potential buy or sell opportunities. Imagine looking at a chart and seeing a clear W or M shape. Those patterns often signal a potential breakout or breakdown. Once you master them, it's like having a trading sixth sense. But don't expect to be a pattern prodigy overnight. Recognizing these shapes and understanding what they signal takes time and practice. Start by focusing on 1 or 2 patterns and learn to identify them consistently. Over time, you'll develop the ability to spot multiple patterns across different stocks, increasing your chances of making a successful trade. Number 6. News trading. Your next hot tip. Do you constantly check the news? If so, news trading could be your jam. This strategy is about capitalizing on market reactions to real-time news. For instance, if a company reports unexpectedly strong earnings, its stock might skyrocket, and you can hop on the trend for a quick profit. The downside, the window of opportunity is short, so be fast or be last. News traders need to stay glued to financial news outlets, earnings reports, and even global events that can shift market sentiment. With news trading, being the first to react is crucial, but timing is everything. You also need to understand how news affects not only the specific stock, but the broader market trends. A good news trader can anticipate market moves based on the implications of news before the rest of the market catches up. Number 7. Risk management, the true hero of day trading. It's easy to focus on the potential gains and overlook the elephant in the room: risk. Good day traders know how to manage their losses. One of the best techniques for minimizing losses is the 1% rule, which says you should never risk more than 1% of your trading capital on a single trade. This way, even if a trade goes south, your overall bankroll stays intact. Using tools like stop-loss orders, automatic sell points to cut losses when a stock moves against you ensures you don't lose more than you can afford. Risk management isn't just about setting limits, it's also about controlling your emotions. Fear and greed are the two biggest enemies of traders. Having a plan in place ensures that you don't panic sell or make hasty decisions when trades don't go your way. Number 8. Leverage and the temptation trap. Leverage is a double-edged sword. It lets you control a larger amount of money with a small investment. For example, with 10-to-1 leverage, you can control $10,000 worth of stock with just $1,000. Sounds great, right? But if the trade goes against you, your losses multiply. Beginners should approach leverage with caution. Think of it like playing with fire. Use it sparingly until you're sure you know what you're doing. Leveraging trades can magnify both your gains and your losses, so it's important to fully understand how much you're putting at risk. As a beginner, limit your use of leverage to smaller trades until you've built up experience and confidence in your strategies. Number 9. The pattern day trader rule. Know the law. The pattern day trader rule states that if you execute more than 3-day trades in a 5-day period using a margin account, you need to maintain a minimum of $25,000 in equity. For beginners with smaller accounts, this can be a serious roadblock. Fortunately, you can avoid the PDT rule by sticking to a cash account or simply limiting your trades. This rule is there to protect newer traders from overtrading and getting caught up in the whirlwind of the market. The last thing you want as a newbie is to have your account frozen because you violated the PDT rule unknowingly. It's essential to familiarize yourself with these rules and regulations early on so you don't run into unnecessary restrictions or penalties. Knowing the law in trading is just as important as knowing the market itself. And that's a wrap on our beginner's video to day trading. If you enjoyed this video and want more tips, tricks, and strategies for trading, smash that like button and don't forget to hit subscribe for more content just like this. And hey, if you got any questions or want to share your own day trading experiences, drop a comment below. We love hearing from you. See you in the next one.